I'm going to talk about the cement space right now. So thanks a lot for that, Manoj. India Cements is one of the top picks on his list. And let's continue our focus on the cement sector. According to Centrum Broking, Q4 was a good quarter for cement companies. Mangesh Bhadang, who's the Senior Vice President Research at Centrum Broking, joins us now. Mangesh, morning. A lot of things are working in favor of the cement sector. Of course, one, growth is picking up. The second is that energy costs have declined quite a bit, and that's a big earnings tailwind for FY24. Just take us through how much of this news is in the price and what are your top picks in the space now?
Yeah, hi, good morning. So you're right. You said that all the cost headwinds that were actually impacting margins earlier have now turned into tailwinds, and we would actually see for the next 2 quarters that the margin should keep expanding. So we are talking about EBITDA per ton expansion of another 200 rupees on a per ton basis. But having said that, if you look at the stock prices, I think a large amount of stocks are actually factoring in the good news that we would expect in 24 and largely in 25. What we are looking at is FY24, definitely it's a consensus that is going to be a very good growth year for demand growth. But whether that would get followed through in FY25 and whether it turns out to be a really bad year for demand, because we have seen that post-election years, generally demand tends to slack a bit. So if it happens, definitely we are looking at higher capacity additions and no demand growth. So that's why I think one needs to be concerned. And as I said, most of the stocks are above their average EV EBITDA bands, and that's why we would be skeptical at looking at most of them. So we are sticking to the larger ones in large caps and very select mid caps name where we see that the valuations as well as earnings is in favor.
Mahesh, but most companies we've spoken with have told us that any help they get on margins, EBITDA per ton, etc., is largely on account of what happens to coking coal prices, input prices basically. In terms of actual price increases here, but one can only expect that post rains. Is that your assessment as well?
Yes, absolutely. If you look at the pricing, cement pricing has been resilient and stable for the past 6 to 7 months. And that was when the EBITDA per ton was actually lower. And now that we are looking at the expansion, instead of the rise, actually, if we might see some pricing pullbacks when the monsoon starts, that's what we are building in. So for the next 2 years, we do not expect any pricing growth for the sector. And in fact, as I said, there could be some time periods wherein the pricing could actually pull back a bit. If you look at the EBITDA per ton of the industry as well as the sector, we are looking at 1100 rupees to 1150 rupees as EBITDA per ton for the sector. We do not expect it to go back to the highs that we saw during the COVID times of FY21 and some parts of 22.
Okay, all right. I just wanted to understand what is the kind of EBITDA per ton improvement that one can see across the board and also across your coverage universe, and also for individual stocks, which could be the biggest beneficiaries as far as EBITDA per ton is concerned. I just want to put one brokerage view on board. Jefferies put out a note where they said that there is an EBITDA per ton improvement of 200 to 220 rupees across their coverage universe for FY24 versus FY23. You think it could get better than that? And which are the stocks that could be big beneficiaries?
Yeah. So purely if I do the math of what was the average petcoke and coal price for most of the cement companies and what it is trending right now, that should translate to 200 rupees decline in operating cost per ton for cement companies. If the coal as well as petcoke prices slide further, definitely we are looking at least say 300 rupees decline. But so the EBITDA per ton is a function of both costs as well as pricing. So our view is that if there is more than 200 rupees decline in operating cost, I think that gets passed on to the consumers, and we would see some softness in realization, but the EBITDA per ton expansion would probably get restricted to 200 rupees per ton. And the key reason for that is basically competition. So we have seen larger players. We are not basically they are not looking to raise pricing in the market, which could probably help their competition. So that's the reason why any further help on EBITDA per ton might get passed on to consumers.
Got that, Mangesh. Thank you very much for the perspective. But